Welcome back to the big show. The January inflation report shows the consumer price index rose by 2.4% compared to last year. The numbers came in better than what economists were predicting. And the CPI shows that this was the slowest pace of inflation since May of 25. Here to explain the inflation report is Vice President of Wilsey Asset Management, Mr. Chase Wilsey, who is back, dry and safe and sound here in the studio.
I don't know about dry. little water on the way in.
2.4. This mythical number of 2.0 that supposedly is the benchmark for where inflation should be. First of all, how was that determined, and why is 2.0 the magic number?
This was something that came out in 2012 from the Federal Reserve. I think the whole concept is you do want inflation, right? You don't want deflation where prices are declining. So you want a healthy level. Is 2% the level that is what I'll call healthy? I'll leave it up to the economists there at the Federal Reserve as to why they came up with that number. But again, that is the benchmark that was established in 2012.
So I believe the experts were predicting 2.7, came in at 2.4, below the number, lowest it's been in the recent history. Is this a trend or is this a blip?
You know, I do believe this is a trend. I mean, the big thing I'm looking at here is obviously the core CPI. Actually, that was really impressive. It came in a little bit higher at 2.5%, but that was actually the lowest that we've seen since March 2021 when core CPI came in at 1.6%. So that was before I'll call the inflation, the affordability crisis that we really saw falling after COVID. And the reason I continue to believe that we're going to see this pullback in the inflation rate is shelter continues to be a headwind in the report. Overall, the shelter index was up about 3% in the month. So again, higher than the 2.4%, which means that pushing it higher. But the reason I believe that is somewhat misguided is if you look at how the shelter index is calculated, a big component, about 70%, comes from something called owner's equivalent rent. The way this works is they call people and say, how much do you think you can rent your house out for? That was up again 3.3% in the month, and I think a lot of people overestimate. I'll tell you, I haven't looked at the numbers on my own house on what I could rent it out for, so if somebody called me, I'd be like, I don't know.
You know? As much as you can get. But when Trump took over, things like eggs and gas were the hot topic. I looked at both those numbers. You can get gas now in Oklahoma for under $2 a gallon.
Yeah, I mean, across the country is doing well. Here in California, we still have high gas prices.
And eggs were like $2 a dozen. So, I mean, I get it. Those are just two scorecards, and most people are concerned about things like paying for their lights, paying for their car, car insurance and all that. All those things that the White House doesn't control. How do those things get in check? Like, for instance, SDG&E here in town.
Yeah, well, I did want to talk about food prices. I mean, food prices were up about 2.1%, I believe, was the food at home index. But food away from home, that was up 4%. And to me, that's a indicator of strength. Reason being is that's restaurants having the ability to continue to increase prices. And the only reason they're able to increase prices is because there's demand for it. So, I mean, that tells me that, again, we do have a strong economy still. The inflation is coming down for the food numbers. And again, inflation still means price increases. Deflation, unhealthy for the economy. We don't want to see that. But again, to your point with the utility rates, that is something that is out of control of the government. SDG&E, as you mentioned, they're going to be in charge of raising rates here for their local residents.
And is that all AI related?
I believe that's a big pocket of concern in my mind. And the big reason for that is these data centers. The build out here is just immense, and the amount of capital required to do so is going to be very problematic. I mean, these utility companies, they're having to build out infrastructure. Well, who pays for the build out of infrastructure? Everyday consumers. So it is going to be a cost that needs to be absorbed, and it's a huge build out. So the big question is, who's going to pay for this? Is it going to be the big companies like Meta, Microsoft, Amazon, and Alphabet? Or are they going to share that responsibility with the everyday consumers? That's going to have to play out, I'd say, over the next few years.
All right, Chase, we have to call it a conversation. Thanks for rolling in. Get back to work safely, and we'll talk next time. Okay?
I appreciate it. Thanks for having me.
Chase Wilsey, everybody, from Wilsey Asset Management. We'll be right back with more Good Morning San Diego.